Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 futures chart on this very first trading session of the trading week. Let's just quickly start with the S&P 500. We currently find ourselves trading at 4,320. It's now clear to me that we are forming in this ABC correction phase. You know, we've just come off this five-wave Elliott wave structure. And typically what follows after that is this ABC correction. So that's kind of what we're in the process of forming right now. The big question is, when do we bottom? I don't think there's any signs that we've bottomed yet on this ABC correction. And, you've got the 200-day EMA that sits at around 4,270. So that looks like a very clear target in my own humble opinion, which isn't too far below us. You know, if we were to fall down to that 200-day EMA, it represents a 1.35% decline. So that's definitely a price area where I do believe that the S&P 500 bears may target. And the reason I think that we still have a little bit further to fall is due to the Nasdaq100. You know, very similar to the S&P 500. We've just come off forming that five-wave Elliott wave structure, and we're just in the process of forming this ABC correction. But of course, for those who study ABC corrections, the B to a C leg has to pierce below the lows of the A leg. So of course the A leg here represents the 18th of August lows, which stood at around 14,570. We nearly broke below it last week, but we didn't quite get there. So I still do believe that the Nasdaq 100 could potentially fall a little bit further before we do, start to show signs of a meaningful bottom. One other catalyst which I really want to look at and focus a lot of my attention on going forward, for us to trust any bounce that may or may not occur here for the broad stock market, is the 10-year bond yield. We're surging here now to yet again another yearly high. We currently find ourselves trading at 4.511%. This is something that I've been paying very close attention to, and a little bit of advice I gave to my signal team a few weeks ago is that, the stock market obviously goes up when this falls lower. And, this year it's been going up very, very, very aggressively, especially the last couple of months. And that, of course, spelled bad news for the stock market. And, of course, the other asset is the dollar. The dollar started going up back in July. And now, that's pretty much where the stock market topped back in late July. So, these two, when they do incline, typically speaking, you do get the stock market that then declines. One way to look at this is that, you kind of got to analyze it and pretend that if it was a stock, would you buy it? And the honest answer here is yes, you would buy this. We're breaking out on all fronts. We've just had, breaking out of this triangle wedge pattern, creating new yearly highs. So things are starting to look very, very positive for these bond yields, up at around 4.5%, and we could potentially even see a rally up towards the 5% mark. And if that is the case, then you've kind of got to look at the broad stock market and say, do we go higher from here? And then, I think the answer would be no. So I'm not saying that we're definitely going to go up to 5% here in the bond yields, but we need to look and think of a catalyst which could potentially cause this to fall lower. Is it going to be bad economic news, or is it just going to be maybe a technical trigger, perhaps being a little bit overdone in the short run that gives us that decline in the yield and of course the US dollar? Of course, that's something that I'm keeping very close attention to moving forward, and that will definitely have a massive influence on the broader stock market. So I think, we are seeing a little jump in the markets today. We're up 0.02% here for the Nasdaq 100. We're up now pretty much flat in the S&P 500. I think at the start of the session we did briefly go into positive territory, but we look like we're rolling over it a little bit here, and I think that we do still have a little bit further to fall. We're still trading within the month of September, which historically is one of the worst performing months, so I wouldn't be surprised if we did see out this week with again another loss before we start to really start to see the buy step back in and some support in these markets from the bulls as we enter the more optimistic month of October. Then finally, guys, just quickly moving over to the DowJones30. The Dow currently trading at the 200-day EMA. This is an area where I do believe buyers will step back in, and the DowJones30 will be met with some demand. Currently find ourselves trading at 33,915. I would definitely be a buyer here. I think a good risk-reward ratio trade here would be, if you were to buy here, you have your stop loss, let's say around 33,500, and then you'll take profit. You could put up near the swing highs, and it offers you a fantastic almost 5-to-1 risk-reward ratio. That's the type of setup that I would be looking at trading here. Or you could even go and target the swing highs that we achieved just a little while ago, but all of a sudden you've got a good 2-for-1 reward ratio, and that's with adapting that stop loss a little bit lower down in 33,300. So, if you are expecting more volatility, this is the type of trading setup that I would be looking for. One last thing that I want to quickly talk about before we go is Apple. Apple, obviously the largest stock in the broad stock market, with a market cap of just shy of $3 trillion. My cycles here, this is something that I shared with my Signal team a few weeks ago. As we go into the month of October, my cycles are predicting a very strong end of the year rally for the stock of Apple. This purple line doesn't suggest what price it's going to go to. I know that obviously on your screen you can see its purple line going up to $180 a share. It doesn't mean that Apple could go to $180 a share. This is just a momentum gauge. And as you can see, it's been very, very correct in predicting the peaks and troughs so far over the past couple of years here for Apple stock. Here's a great example. For example, this time last year, it predicted the peak very, very well. Again, for the trough here, back at the start of 2023, the peak back in late July, early August, and we are now about to find a trough here as we move it into the month of October, with some potential pullback in the month of November before ending significantly higher going into year end. So that's something that I'm keeping very close attention to, because that will have a positive effect on the broad stock market if Apple is able to rally higher. But that's going to be it for today's video, guys. I hope that you've enjoyed today's video. Don't forget, if you'd like to join my free trading signal group, it's completely free to join for 1 month. If you don't enjoy the service, you can cancel at any time for completely free of charge. But all you got to do to join is scan this QR code on your screen. It will take you to my website where you can sign up. It takes 10 seconds to get involved. But thank you very much for watching today's video, and I look forward to seeing you all tomorrow.